G'day, trendsetters. Just wanted to have a quick talk tonight about bond yields. And so bond yields, government bonds, they issue a bond. So can you lend the government money? And they've got a 2-year bond, a 5-year bond, for 10-year, 30-year, and so on like that. And then there's shorter ones too. So let's go to the US, and I'll just go through this. If you're listening on the podcast, I'll talk it, but some of you will see it on the screen, and I'll take some screenshots. But here's Treasury Yields US. So we'll hit the US. We're on Bloomberg here, Bloomberg, and the 3-month is 3.19%. The 6-month is 3.85%, and so it should be, because it's a longer period. And then the 12-month, that's 4%, so that's a longer period, so you get more interest, so you should for tying it up for longer. Then you get to the 2-year, which is 4.18%. All good so far. As we go up, from the 3-month to the 2-year, we got 4.18%, which is not that great compared, to inflation. It's probably 10, 15%. So you're losing, 6 to 9% a year. Who knows how much? But anyway, as we go on now from the US Treasury yields, the 2-year, the 5-year, the 10-year, and the 30-year. So the 2-year was 4.18. Then we've got the 5-year, which is 4, which is less. Tie it up for 3 more years and get 0.18% less interest. Then we get to the 10-year, and we got 3.76. So that's even less again for 10 years. And then we get to the 30-year, which is 3.67. So it gradually goes down from 4.18 to 3.67 from the 2-year to the 30-year. That's what they call a yield curve inversion, which means if you mapped it out on a graph, instead of the line going from left to right and rising, the line goes from left to right and declines. That's why they call it an inverted yield curve. It is also usually a 99.99% chance that you're going to be, or you're already in recession. So the US has been in recession for a couple of months now, a couple of quarters, and it's still going to be in recession for the next few, if not a depression. And it'll catch a cold, and the rest of the world will get pneumonia. So because COVID's over, whatever the fuck that was. And so we'll go to Australia. Now, all a bit more sensible over here in Australia. We've got Australian bond 2-year is 3.35, the 5-year is 3.68, the 10-year is 3.9, and the 15-year is 4.06. So, as we know, Australian inflation is much higher than 4.06. So, we're still going backwards there by holding a government bond, but at least the yield curve is curving in the correct manner. That doesn't mean the economy's healthy, but it may mean that it inverted a little while ago and we're going to hit the recession, or we're yet to invert. Maybe it won't invert. But anyway, we go to Germany, just for giggles. Actually, I'll go to Japan. Won't worry about Germany and the UK. They're pretty boring, right? Let's go to Japan. Here, this is a good one. The 2-year yield is 0.08%. Now, let me get off track just for a second here, trendsetters. 0.08%, I've just realised by coincidence, is how much of B2 Gold mining company I own. I added up all my shares and what each share was worth, and then divided it by the amount of shares outstanding, found out how much of B2 Gold I own. 0.08%. That's got nothing to do with the 2-year Japanese yield, so I'll carry on. The 5-year yield is 0.02%. Which is less. As if you'd buy one of these things. 10-year yield is 0.22%. So, congratulations, Japan there. And the 20-year yield is 0.93%. So that's at least getting larger. And the 30-year yield is way up at 1.27%. And by God, apparently they're experiencing a bit of... They're trying to stop deflation, and they're getting inflation now. But... Look out the US. Look out when all those US dollars go shooting back to the US. the US dollar will collapse. So it's just about at the end of its run. Anyway, that's the yield curve inversion, and it's looking really, really ominous. Lots of people biting each other's heads off and having short fuses and things like that, and no one really knows what's about to happen, but everyone thinks there's something about to happen. Well, a lot of people do. And I think it is happening. It's not, it's about to happen. We're in it. And the Australian stock market is down, last time I looked off the top of my head, 23 point something percent year to date. So that's, every day at the moment, it just keeps dropping a bit more, percent here, percent there. Sooner or later, you're talking about a real drop, So it's excellent to see the stocks in companies getting cheaper and cheaper. Look how cheap Bitcoin is if you wanted to gamble your life away. You can go and buy it for bugger all now. It's on sale. Go and snap some up. You might be able to buy a lawnmower off bloody Gumtree with it or something, Anyway, that's the yield curve inversion. Thanks for listening, guys. And I see I got 25% females out there. I didn't expect to be talking to females, so g'day to the ladies. And some of you know me personally, so g'day to you. But yeah, and g'day to all the blokes out there that are listening. And I'll see you on the next one. Now we stop this damn thing.